Hi, this is Greg McCoach, editor of the Mining Speculator. I'm here with Mike Williams, CEO of Vendetta Mining, and we're here at the Metals Investor Forum here in Vancouver. Mike?
Good to see you, Greg.
Glad to be here. So, you and I had dinner the other night,
Yep.
and got to meet some of your people, and it's always what I look for, the right people, the right jurisdiction, the right type of mineralization.
Right.
And you've had a very exciting project. I missed the early going on this one, but I'm going to be following you from now on some other deals. So one of the things that I would like you to explain to our viewers, because for my subscribers, this is a first intro to them with Vendetta. Yeah. And so you're at the stage where you're actually, moving forward in a big way, and there could potentially be a buyout.
There potentially could be.
Right.
I think we've got a PA coming out next month.
Right.
Now, we've done it as a standalone.
Yep.
We are prepared to put it into production, but having said that, there's some obvious suitors in the area that need feed.
And you have the asset, the high-grade asset that they're all looking for.
We think it is, and we'll have validation next month when the numbers come out.
Right.
But essentially, we've taken the ore body Pegmont, which is in Mount Isa in Queensland, which is a good jurisdiction, but we knew right away that we had a big advantage, and that's infrastructure. Mature infrastructure had grown up around the project, so we're 15 kilometers away, or 10 miles away, if you will, from power. We're 2.5 miles away from roads, and we're access to rail and smelters. But the key thing really is there's 2 mills in the area. Right. Now, one is owned by a company called South 32. South 32 it's a big company. It's a $20 billion company. Oh. They were a spin out from BHP, Billington. So they have a mine that has a declining grade. So they're trying to pick up the value through increasing their throughput at their mill, which is 3.2 million tons per annum. They would like to take it to 4, and they've been public saying this. The problem they've had, instead of going, the only way they can do it is to open pit their ore body, and the value of the Pegmont ore, we think, is greater than the value of their open pit ore. So it makes infinite sense, and in fact, their production has dropped from 3.2 to 2.4 million tons per annum due to some issues that they've had in their underground mining. Yeah. So Pegmont, if you look at it on the surface, no pun intended, 2/3 of our ore body is open pittable, makes infinite sense for those guys to do something with them. And our metallurgies work together. We can produce a complementary con for them. So it makes sense. I would think they would be an obvious suitor, but I can't speak for them.
Of course not. But just from what I've learned and what I've seen and talking with your guys, the numbers seem to work for this economically, and that's what makes a producing mine, right? And you got to have all the right numbers, and it has to be in the right jurisdiction, and has to be at the right time, the market cycle for zinc. And
mining's about making money, it's not about making metal, right? And we were cognizant of that when we put the project together. We built a mine plan around Pegmont and drilled to that mine plan. I work with a very good mining engineer named Peter Valgaris.
Absolutely, met Peter,
Peter spent 7 years with Robert Friedland. He was technical services manager at the giant Oyu Tolgoi mine, one of the big copper
Very impressive,
He's an impressive guy.
Very impressive.
So he put this project together properly, and I think companies like Cannington or the Chinese group that's 25 kilometers in the other direction that needs feed, they will see the work that we've done and realize it could work for them. But at the very worst, we've underpinned the value of Vendetta as a standalone operation, we think.
Yeah.
And
you're a wealth creator. You've done this before.
I have. I've been,
Why don't we tout your horn there?
I appreciate that. One of the things I'm most proud of at Underworld Resources, which is the company I was a founder of.
And we were just talking about that in an earlier White Gold.
We spent $28 million in the ground and ended up monetizing it 36 months later for $139 million when Kinross bought it.
Right.
That creates value, and that's what this industry needs. You've got to create value for shareholders. Pegmont, it's a different scale. We'll put probably $8.5 million in the ground. We're there at 7.5 now, and I hope to monetize it at a significantly higher value than that, and I think we will.
Yeah, and one thing I want to address for people, a lot of investors in America and Canada are not as familiar with Australia.
Right.
And so my experience in Australia is that there's good and bad parts, good sections where you can get things done and move forward, and there's other sections that politically get so screwed up that it's almost not worth it. you're in one of the good areas. I want to just make sure we state that. So
Yeah, if Queensland were the NFL, we'd either be Pittsburgh or New England. We're one of the, your key areas. It's either Queensland or Western Australia,
Right.
the two good areas. We're Mount Isa is one of the preeminent mining districts
Right.
in the world. It's
Right.
like the Timmins Camp. It's like the northern areas in Battle
Right.
Mountain in Nevada, for instance.
Right.
It's one of the areas you want to be in.
yeah, and I think just the general perception sometimes of investors on this side of the ocean, sometimes is Australia, oh, it's too far away, it's just, there's issues down there, their stock market's a little corrupt, blah, blah, blah.
Right.
You get all those kind of
Yeah, yeah.
red flags, right?
Well, I'll tell you what, Greg, it's interesting you said that, because one of the problems we had you mentioned you're coming to the story later. It's odd initially that you have a Canadian company taking an Australian asset, financing it in Canada and advancing it. Well, why aren't the Australians?
Right.
I'll tell you why, because Peter had an idea how the ore body was structured and how we had to drill it to advance it.
Right.
So we're able to do it, but we raised the majority of the capital in North America. And a lot of things our investors liked was it's a safe political environment. I think if you look at the current, you look at the socio-economic and the things we have to deal with in the industry, you have certainty in Australia, you have certainty in areas in the United States and Canada. Those are your top three mining
Right.
So I'll take certainty and travel 18 hours on a plane to get there.
No, it's
right.
I'm willing to take some risk, and I'm willing to get on a plane to go there. But
Yeah, exactly. So we like Australia, but
Yeah.
I've spent a lot of time doing a lot of exploration in Canada and Alaska, and I'll tell you the difference that we found with Australia: 4 kilometers from haul roads, power close by. The infrastructure in Australia in these mining districts,
Excellent.
it gives you the leg up to make these projects economic.
right, and a lot less expense, right?
Yeah, so at the end of the day, I think investors are willing to have us in an area like Australia. Sometimes the costs are a little bit more, your drilling's a little higher.
Yeah.
It's been reasonable because of the downturn in the industry, but at the end of the day, we can monetize assets there, and you don't have to worry about them being meddled with by governments or, in
Yeah.
some cases, cartels and things
Yeah.
of that nature. It's safe political
Yeah.
risk, and
Well, I think we want to mention that to this set of viewers.
can't put a price on that.
No, that's right. And you mentioned one other thing I just want to end up here on. Peter, you said Peter, wanted to understand the structure first. See, I think that's always so important. Instead of just randomly putting in drill holes, I like when companies, figure out the structure. It may get a little boring for a little while where you're not putting out as much news, but then you're moving forward with a much greater chance of having success when you drill.
Well, it's harder actually some ways from a market point of view, because you're doing things systematically.
Yeah.
You're doing them properly, and it's not always the sexiest way, but it's the proper thing.
Yeah.
Now what happens though is when you get to the stage where you're at with PEA, you can now quantify your asset, and I think that's the key thing.
Yeah.
The work we've done should pay dividends now, and everything we said would happen has come to fruition, and
Yeah.
at the end of the day, I think we'll be fairly valued.
Yeah. Michael, great interview.
Hey, thank you very much.
Hey, we'll
Appreciate
be
the time.
watching closely,
Please.
and as soon as we hear news, we'll.
I'll let you know.
Yeah.
Thanks, Greg.
Thanks for being here.
Thank you.